Hi everyone, welcome to today's video where I will be covering Adani scam and its financial fraud allegations by Hindenburg Research. Recently, Adani company has been in the headlines due to stock manipulation and accounting fraud. It is important to understand what this means and what the consequences could be for investors. Those who supports Hindenburg report says Hindenburg report has very strong evidence about Adani's scam, and the scam needs to be investigated by SEBI or Government of India, and bring the truth to public. Adani supporters are arguing that the Hindenburg reports is a selective misinformation and baseless allegations. And also, Hindenburg company is a short seller, and they make all these allegations to book a massive financial gain through short selling of Adani's shares. Let's see who is Hindenburg, what they do, and also find out Adani supporters' claim is true or not. Hindenburg is a forensic financial research company. In other words, they look for corruption or fraud in the business world, such as accounting fraud, and bad actors in management. Why did they do it, and what benefit they are going to get? The answer is simple. To make money. How they make money? Opening a short position on the company which they found fraud on accounting or management misbehavior. Once their analysis confirmed it, they will open a short position on the company, and then they will publish the report to spread the news. Now they will expect share price to fall, and if that happens then they will close the short position to book the profit. Based on this, what Adani supporters are claiming seems to be true. What Adani said. Hindenburg is a short seller, and they will make money by spreading a false allegation, and what happened here is after the allegation Adani shares are down 50% or more, and Hindenburg might have made big profit. Now, can we ignore Hindenburg report altogether? And consider all these are false allegations? Before we make conclusion, let's ask another question. Adani is the only company that Hindenburg accused, or any other company? Hindenburg has flagged potential wrongdoing in at least 16 companies since 2017. Hindenburg is best known for its bet against electric truck maker Nikola Corporation in September 2020. Right after the Hindenburg report came out, both U.S. government, Securities and Exchange Commission, which similar to SEBI in India, are investigated this allegation, and they found that the Nikola founder was made false promise to investors. The court ordered to pay $125 million as penalty. In this case of Nikola, even though Hindenburg might have made money by doing short sale of Nikola's shares, the allegations against Nikola is true. The same way, could it be possible Adani's allegations can also be true, correct? Now let's look at the Hindenburg report and see what they are trying to claim. It is a 100-page report. In a nutshell, it says Adani's listed companies are overvalued, and its fundamental doesn't support the overvaluation. The massive amount of debt put the companies into a risk of defaulting its debt obligations. They also provided the reason for overvaluation, which is stock manipulation and accounting fraud. Because of the stock manipulation and accounting fraud, their stock prices are increased almost 8-folds in last 3 years. At the same time, Gautam Adani's net worth increased multifold. Due to the overvaluations of these stocks, price to sales and enterprise multiples ratios are multiple times higher than industry average. 5 out of 7 companies have near-term liquidity pressure because of loan taken through share pledging on the inflated share price, and all these 5 companies are having current ratio is less than 1. The report also has many points explaining how the stock manipulation is carried out using list of shell companies in tax havens to inflate revenue and stock prices. Among the allegations, it identified 38 Mauritius shell companies entities controlled by Adani's brother, Vinod Adani, and his close associates, plus entities controlled by him in other tax havens. The offshore shell network seems to be used for earnings manipulation. It also raised 2 key accounting red flags. Number 1, Adani Group of companies have struggled to retain chief financial officers. Number 2, the independent auditor for Adani Enterprises and Adani Total Gas is a tiny firm that reported having only 4 partners and 11 total employees. and which has audited just one other listed firm. The auditor hardly seems to be capable of complex audit work, when Adani Enterprises alone has 156 subsidiaries, and many more joint ventures. Hindenburg also raised series of 88 questions about accounting transactions. For all these Hindenburg allegations, Adani responded on January 29, 2023, saying these allegations are selective misinformation and baseless allegations. Also, this is not just an attack on Adani company alone, but it is a calculated attack on India, Indian institutions, and the growth story of India. The response also includes answers to 88 questions. It says 65 of them were related to matters that have been disclosed by Adani portfolio companies in annual reports. The rest were related to public shareholders and third parties, and some were baseless allegations based on imaginary fact patterns. So, now we saw Hindenburg allegations and Adani's responses. When two persons are in a war, one could be winner and another could be loser. Let's see who is winner and who is loser. The winner is Hindenburg Research Company. I am sure you can also agree with me that Hindenburg is a winner, because they were short on Adani's companies before releasing the report, and as expected most of the Adani's companies' share prices are fallen, so Hindenburg might have made profit out of it. The loser is not Adani, but it is retail investors. Why do I think it is not Adani, even though Adani's share price is fallen 50% or more, and Adani's personal net worth is down 90 billion? Also, when he was lost his #1 position of Asia's richest person. Let's look at what could have happened. Do you think Adani would have sold any shares from his promoter's holding? Not at all, because he had responded saying that the company did nothing wrong and all of these allegations are false. If that is the case, he has complete faith on his company and he would not have sold any shares. So, the 50% fall on his net worth is just on paper, and it is not a realized loss. If that is the case, how can we call him as a loser? Okay, then how come retail investors is the loser? Let me put my points on this way. Adani's companies are fallen 50% or more, and we also saw the possibility of no promoter's share sale. Then who else could have contributed on this fall? Most of them would be retail investor, who would have made permanent loss. If you are a retail investor, what you can learn from this scam. Do your own research before making an investment decision. You may ask, is it possible for a retail investor to do similar research that Hindenburg did? I agree, it is not possible for a retail investor to do similar research that Hindenburg did, but when you look at Hindenburg reports closely, all it says is the stock price is overvalued and company's fundamental doesn't support these overvaluations. Very simple point, isn't it? All other points are to prove overvaluation of the stock price, because if Hindenburg simply puts one-line statement saying, Adani's companies are overvalued and its fundamental doesn't support these overvaluations, who will believe it? Do you think you would have believed it? That's why Hindenburg needs to find very strong reasons with supporting evidence to prove their analysis has promising points, and then publish the report, so that general public and investors will believe in it and they act on it. But for a retail investor, all you need is to find out the company management history, the business they do, stock price valuation, and make sure the stock is trading at its fair value. In case of Adani, it is very clear that the stock price is overvalued based on its financial ratios. One could have easily avoided his, or her, investment and could have escaped from this 50% or more fall, and saved his, or her, capital investment. At least in the future, do your own fundamental analysis, understand the financial statement, and then make your investment. Also make sure that the company is managed by a good management team. Hope you enjoyed this video. Thanks for watching, and we'll see you soon in the next video.